and welcome live to the LV Home Experts Radio Show, where we talk about real estate and financing every Wednesday at 4 p.m. Pacific Standard Time. So today we have a very special guest, and today we're going to be talking about what's going on with the Las Vegas housing market. There's so much that's going on. Market is so volatile. It's going up and down, up and down. It's going sideways. Man, I can't believe what is going on. So we have a very special guest today, and his name is Sean. Which, Sean, I don't want to destroy your last name. How do we pronounce your last name here? I don't destroy it.
Uyehara.
Uyehara. Sean Uyehara with Loan Depot. So Sean is actually a lender. So we actually got two lenders on the show today. So hopefully by the end of the show, you guys are not scrapping.
I got much love for him.
Yeah. We worked together before, so.
Oh, really?
Yeah, we were at Mutual of Omaha.
Totally respect.
Oh, wow. So you guys sat across the office together? Is that how it works?
Yep.
Okay.
Yeah.
So for some of you guys don't know, my co-host, Dan French with Guaranteed Rate, the king of all kings when it comes to financing. He will get you any rate you want. 2.2, right? Is that what was
Yeah,
in the market?
I sling rates. What you want? I got it. What you want?
So the reason why we got Sean on the show today is because this is important. Because we want a different perspective. That's the reason why we always have guests on the show, right? Because we don't want to sway somebody's opinion, right? Everybody has an opinion what's going on with the market. Like I said, it's so volatile. So as of today, I've noticed, right, according to the MLS, we currently have, for single-family residents, townhomes, and condos, 970 homes currently available. Now, if we take a look at this, the median price point, right, across the board for all this stuff is $410,000. But I want to talk about what's going on with the housing market. What are you seeing right now in the housing market from your perspective, Sean?
I'm starting to see, a lot of price reductions. In my opinion, I think a lot of that was just due to overzealous sellers that, they knew that there was one other house that sold in their cul-de-sac in their neighborhood, and it went for $500, and they said, hey, you know what? I'm going to sell for $550.
Yeah.
And I think a lot of out-of-town folks that are relocating here were willing to pay the $550 and the $600 the last couple of years. And now that homes are sitting for a little bit, they are starting to maybe panic a little and, having to readjust to reality. And obviously, I think interest rates jumping up, almost a couple of points the last month or two, I think that, panicked a lot of people.
Yeah. Now, I was actually looking on bankrate.com. I don't know if you guys look at that stuff or not, but I like to, right? So basically right now it says on here on their website, on a 30-year, it's at 5.59%, and on a 15-year is at 4.8%. What challenges are you having in today's market right now with buyers, with rates being that high? And I don't want to say it's high. It's something that we're no longer used to, right? Because when I locked in my rate, I was like at 5.5, and I thought I got a killer deal. Mm-hmm. But the whole another generation of buying homes, right? A whole different demographics was buying at high threes. We got so comfortable with that. So, right. I mean, I guess how do you combat that? And what are you seeing now with buyers at that, interest rate?
I mean, I think anyone that's been in the business long enough knows that 5.5 is not horrible.
Yeah.
I got into business back in 2007, and I bought my first house. My rate was 7%.
Damn.
And I did my own loan, and that was an interest-only loan.
Oh, wow.
So that was the best of the best that you could get. But, that's obviously a question a lot of people ask.
Yeah.
But if you actually look at the history of the 30-year fixed mortgage, which you can go to Freddie Mac's website, and they publicly give this information out, I've actually calculated what the average was from 1971, and it's actually 7.76%.
That's actually not that bad.
Here's my thing on it, and mm-hmm. I agree with you, right? But I'm gonna disagree with something where, yes, we have rates that high. Mm-hmm. We also have all-time prices on homes that we've never seen. The problem is the combination. It's not the rate. It's yes, the rate's high. People are like, hey, I'm not gonna like that, but they may be able to buy into this market, but I think when you combine that with the highest prices of homes, I looked at the history, we are the highest ever at least in the last 20 years.
Oh, yeah, especially for Vegas.
So, yeah, so when you combine those two, and then you have a mortgage payment that's significantly higher than what you anticipated, I think that's the issue, right?
So what that tells you is the consumer is not buying the house. What they're buying is a payment.
Right, and that's where you've seen kind of that meme that's been going around, you know, marry the house, date the rate kind of thing.
Yeah.
But I think the market that we're in right now, to Dan's point, yeah, payments are higher, prices are higher, but I think right now we're in a point where sellers are reducing their price, but instead of what we've been educating our clients on, instead of taking a price reduction, get the seller to pay for your buy down.
Yeah.
Take a lower rate. So 5.5, we can buy that down to 4.5.
I'm seeing that a lot in today's market where the lenders are, I'm sorry, not the lenders, but the builders, right? If you work with their lender, these guys are literally giving up to like $17,000 and even more towards buy down or lender credit, however you want to spend it. It's totally up to you. But my question to you is that if somebody was going to do that, how much of that can you actually absorb towards buy down? Because there's a certain amount that a seller can contribute to the buyer's closing costs. Am I correct?
Yeah, it depends on the loan type. So yeah, it depends on the loan type, the LTV, but I mean, just a rough general rule of thumb, if you get a 2% credit from the seller, you can probably buy down about 1% on your interest rate.
Yeah. How does that buy down actually work? And what is a buy down for all the new listeners?
So basically, as a lender, when you're paying a buy down, you're essentially paying what we call points, or a lot of people hear the word points, and it's a percentage. 1 point is 1% of the loan amount.
Yeah.
So you're essentially paying an additional cost to get a lower rate for that day. But yes, there is a certain threshold as to, am I going to pay an extra, if we're looking at the average price, 400,000. So a point would be $4,000 to maybe save you $75 a month in payment.
So how do you know if it's a good deal?
It's customer driven. How long do you plan on staying in the house? What's their financial goal? Because the crazy thing that I've seen over the last probably few months is that, guys that bought the last couple of years, and there was one specific client. I remember we did a deal in Texas, and he beat me up on the rate. We got him like 2.5%, and he's calling me trying to refinance right now.
Yeah.
And I'm like, why would you refi?
Yeah.
We just got you 2.5, like not even a year ago, and you're wanting to pull money out of your house. So I think it's one of those situations where the customer's got to really understand what they're getting into, right? Because a lot of online lenders, and we won't name names, but I've seen estimates, and I'm sure Dan will say the same, where these guys are charging 3-4 points, and the clients have no idea that they're paying, an extra 20, 30 grand to get a certain interest rate, because I think the customer is just so accustomed to deciding who a lender is based on rate.
Yeah. It's kind of crazy at 2.5%. Too bad that the deed, they took out the escalation clause, right? Too bad you couldn't just go ahead and sell that loan to somebody else. But unfortunately, they have that due on sales clause, so I guess that doesn't work. But anyway, with the housing market, it's so volatile right now. I think it was like our all-time high was $485,000 for about a 3 bedrooms, 2.5 bathrooms, 2-car garage, right? Roughly about 1,800 square feet. It literally dropped down to about $465 a couple weeks ago. Last 7 days, I'm sorry, not 7 days ago, but 2 weeks ago, it dropped down to $440, it was crazy. And I pulled up the numbers today, and I kind of run the market based upon a 7-day, right? It depends how you run the analytics, right? I always like to do 7 days because I want to know exactly what's going on today. So today, believe it or not, we're at 450,000. And this weekend, I literally took out, I'm going to say 5 buyers, took a couple listings, but it was amazing that the 5 buyers that I took out, we all wrote offers. Then Sunday, I took out another buyer. And it seems like the buyers are now coming out of the woodworks that couldn't buy. They started to realize, hey, I could actually buy. And we got a couple in the contract. So some of these builders, let me give you an example. We were able to beat up on the price, about like $30,000 on a price reduction. And I got $17,000 towards, closing costs. But my client asked me, hey, should I pay, use this money to absorb towards the closing costs or use some of this money to do the buy down? But obviously, you got to run the numbers, right? And going back to the numbers, like you said, the cost, let's say if it's $4,000, but you're saving $75 a month. So you just got to take that number and divide it by the 4,000, and it's going to tell you exactly how many months you got to stay in the home just to break even.
Correct. Yep.
Right? Or should I play the game, get that high interest rate, get my closing costs paid for, so that way I have less out of pocket? The reason why I'm saying is this, because if the market tanks, I don't really lose anything because it's no cash out of pocket, right? And should I play this game and wait for the rates to drop, then to do a refinance, even though it costs me money to do a refinance, but in the long run, I'm winning. But that's also going to be based upon what's going on in the future if the rates will go down. So what would actually be your strategy if I'm asking you that question? What route would you actually take?
I think it goes back to, what your motivation is.
Yeah.
Your financial goals. How long do you plan on staying in the house?
Mm-hmm.
And we really need to answer that question.
Yeah.
Because, if it is, let's say you relocated here and you got a job, but your job's temporary and you might be here for 3 years.
Mm-hmm.
Okay, well, if you recoup your cost in, call it 24 months, okay, well, let's maybe take the buy down because you will be ahead in the event that you do sell. But if it's something where, let's say the recapture period's 6 years, more often than not, I would say you would probably refinance. So maybe take the closing costs and cover your out-of-pocket expenses.
Yeah.
Take the difference in the rate, and if the payment's not that drastically different, which again depending on the scenario, you may just want to take the closing costs, and just preserve some of your capital.
How would you approach this, Dan?
As far as the buy down?
Yeah, would you do the buy down, use the money to do the buy down, or just use that money towards the closing costs and kind of roll the dice to see if the market is going to drop rates in the next 5-6 years to refinance?
I'm probably going to do, it depends. Like if you're using the seller's closing costs, then I'm probably going to do the closing costs.
Okay.
And I think the reason I'm going to do that is because you're not married to that rate.
Yeah.
And if it can come down, it can come down. And that's less cost out of pocket for you up front. Now, that's if you can sustain that payment, right?
Yeah.
We have to make sure that, you're not going to be mortgage broke. But if home affordability is there for you, then I think I'm going to take that and then risk long-term, maybe, taking a look at refinancing later.
I mean, you guys get a bunch of applications, right? You guys run the debt to income ratio. Just to be on a conservative side, sometimes buyers will max out, right? When you look at this, do you say, hey, maybe you don't want to go too much? I mean, you're qualified for 500,000, but you probably should stay around the 400 range. Just do the fact that you're really tapping yourself out. I mean, are these things that you guys look at as a lender? But obviously you guys don't make that final decision, right? The buyer does if they want to spend the full amount.
Right.
Yeah, I mean, you always look at, everyone wants to know what the maximum is. And that's not only the buyer, it's the realtor too.
Yeah,
right? They're always asking, what's the max that we can go to? But the real question is, where does a client feel comfortable payment-wise?
Yeah.
I think a lot of times the optics of saying, hey, I can go buy a $500,000 house is one thing. But when you tell them, hey, your payment's going to be $3,000 a month, that's a different story. They might say, look, I don't want to go more than $2,400 a month. Okay, well, let's now bring you back to where that's going to be in order for that number to work.
Mm-hmm.
I think the problem with it, though, is that when it's the market, right? Like, you might be able to buy $2,000. Maybe you want a $2,000 mortgage. But let's say, what's that going to get you in today's market, right?
Nothing.
So now you have that decision of, and this is what I think a lot of people are doing, and that's why they were on the sidelines is, well, if I can't get at least the house that I want, and I don't want to put myself into being mortgage broke, then I'm probably just going to wait. And I think that's what a lot of people have done. You got to look at the market. You got to look at, it's not just payment, but it's also what actually can you get and what can you buy with the money you have.
And that's funny that you said that because like I said, my buyers, I was literally dried out for like maybe about a week and a half. But this past week, everybody was like, yo, I'm buying a home. Matter of fact, we just wrote an offer today. Mm-hmm. And that was one of our clients for a Saturday, and it's unbelievable. However, we are asking for like a price reduction, obviously, like everybody is, right? It's crazy. I mean, I'm seeing price reduction after price reduction. And like these builders, everybody's readjusting right now for the market. But I feel like, I don't want to say it's plateaued, but I'm starting to see action back into the market. So that's a good sign for the buying side.
I wouldn't say for new though, right? I mean, new homes, they're 10 months supply across the country. You got the new home sector is completely stopped. They have to try to get rid of, they can't sell these houses anymore. So I don't know. You look at the new homes, they're trying to get rid of what they can at all costs.
Yeah.
And so I don't know. I think once they get rid of that, when the month's supply comes down, maybe they start back up.
Yeah.
If it does come down, but we're just way too far gone this is like an unhealthy market for builders.
But what was crazy is the permits. I looked at this last week. They pulled a bunch of permits, but as far as housing starts are low. So what that means is builders are pulling so many permits, but they're really not building. But the housing starts are not that much, so they're really not really building. So like what you're saying is, I think is completely true, and I think they're just kind of testing the waters and seeing what's going on. But also what I've noticed, a lot of these builders are now, a lot of them are speccing out the home. And what I mean by that is, before with some of these builders, you can go in, you can buy a lot, and you can literally build from ground up. Now it's no longer like that. What they're doing is they're building the home, already having the options, if you want it, and this is how much does it cost.
Well, a lot of it too is because of materials.
Yeah.
Right? They lack of materials. You had people coming in, it was supply and demand, You got, low supply, so they're going to say, look, how do I turn this inventory? How do I turn this property as fast as I can? That was it's a big deal for that, for the spec.
I'm sure they're buying, hey, we can buy a bulk of this flooring,
right?
Let's throw it in, and if we save 10%, then that's 10% more margin we can sandwich on the back end.
Yeah, that's true. Now, I've noticed that the lumber materials and supplies for housing drop about 8%. So that just tells you people ain't really buying. So now things are getting a little bit cheaper, but I think inflation is actually here to stay. So I don't think things are really going to drop, right? I think the market, my personal opinion, I think we probably have another 15 to 20 more % to go. But again, that's just my opinion based upon what's going on in today's market. Do you feel that the market will backslide a little bit more, or do you think we've stabled off? Where do you think we're going to be in the next 6 months?
I mean, I think if realtors continue to reduce prices, we'll have that.
Yeah.
But I think if you go about it in the sense of maintaining prices and asking for credits, which there's a whole strategy behind that.
Yeah.
You can try to maintain some of that, but whether we go down another 10% or so, I mean, I don't think that's necessarily a bad thing.
Yeah.
For our market, because I think we are overpriced, like Dan said, and things obviously skyrocketed the last couple of years. So I don't think that's necessarily a bad thing. But obviously, if you list a house and you drop it by $50K, Dan lists his house down the road, he's got to drop it 55 to get action on his.
Yeah.
And then if I sell, I got to drop mine 60.
Yeah.
So if we continue to do that as an industry, we're going to have the same problem we had 4 years ago when we had appraisal shortages all the time. So to me, are we going to let that same thing happen all over again?
So it sounds like we all need to boycott and don't reduce the price.
Get the seller to give the credit, man.
So it's better to give a credit versus doing a price reduction.
100%. All day long.
That actually makes sense. Because I noticed that's what happened to me with negotiating with this builder. The builder didn't want to reduce the price, but with all the options, we negotiated that, and that was like $28,000, which was pretty fascinating, right? And I literally got an email like, hey, we'll help you out, but we want to make sure that we're not reducing it based upon the base price. I was like, all right, it is what it is.
So do you guys think we've plateaued?
I don't think so.
No, I think there's some room to go still, because I mean we're going into the winter months.
Exactly.
What about inflation? You think we plateaued on inflation?
That I don't think so, and the reason why is because the new metrics that came out, they actually took out a couple of things, right? Like with the gas pricing. But if you take a look at the whole chart, like food, housing, that was all high. But the gas section, that dropped. So that's where it dropped from 9.1 to 8.5 it is at right now, inflation. So I think that's what kind of helped it out. But we'll have to see with the next report. However, September, we have another meeting. I think we're probably going up another 0.5 point or 75 basis points. Again, that's just my opinion because we still have to slow down inflation. It's still running rapid. However, I think pricing won't go down. I'm talking about groceries, food, milk, whatever it is. So that's just my opinion. What are your thoughts on that, guys?
I think it'll get worse before it gets any better.
Yeah.
Unfortunately.
I do too. I think that the fourth quarter is not going to be good.
Yeah.
I do feel that the market will somewhat stabilize, that it's going to be the new normal, right? To be at that 5%. Now, if the Fed comes back in and starts purchasing bonds in the artificial market, there is a way for this to come back. I think it's just they got to get this inflation thing in check. Inflation's not good for mortgage rates. You can see if inflation goes up, so does mortgage rates.
Yeah.
It's followed, right? So I think we have to see what the Fed's going to do, monetary policy, right? They got to see what they're going to do with that and see what happens from that meeting, because I think that's going to determine what the next quarter is going to look like.
When you look at rates too, this past week, they started to go back up again, So I mean, yeah, I think we're going to see that increase that you're talking about. And obviously banks, we know that they price this way in advance before the meeting. So it's just funny. Like the last time they raised their rates, right? We had price corrections for the better the whole day.
Yeah.
And everyone was like, oh my God, rates are going up. It's like, yeah, well, we had like price corrections for the better today.
Right.
Rates got like a, quarter point better that day. So, yeah.
So you mentioned when you talk to a consumer no longer has a relationship with the lender anymore. The industry is completely different, right? What they're really tied to is to the rate, right? When you're having this conversation. How do you have this conversation with a buyer, and how do you like compete against other lenders when you guys are all competing based upon rate, right?
My biggest thing that I always stress to the customer is that strategy is more important than rate. Anybody can quote you a lower rate. It's easy. All you're going to do is they're going to charge you a ton of money, and they'll give you that lower rate. But that doesn't always make sense for every customer.
Oh, Sergi, super chats, $5. Thank you so much. The housing pricing are way overpriced. It is common sense, and most people know it. I'm waiting on the sidelines for the housing pricing to drop. So sorry about that. Super chat, $5. Thank you very much. I appreciate that. Matter of fact, add us another zero. I'd appreciate that even more. Let's go ahead and move on. Sorry about that.
Yeah, to me, strategy is the most important thing, and we stress that every time we do a pre-approval, we go over numbers. We're always showing at least 3 or 4 options.
Yeah.
And we let the customer decide what might make the most sense for them. There's the online lenders, and they're obviously a lot cheaper as far as rate goes, but you're going to sacrifice, service and knowledge and everything else that comes along with the expertise as to getting a mortgage. So we try to hang our hat on that.
I think one of the problems that consumers are having is they're so set on rates, right? And I'm going to talk about this, 1/8 of a point. And it's more psychological because 1/8 of a point is not that much more on the monthly payment, but it's crazy psychologically, right? Like
I'm gonna talk a little bit about something
please do.
with it. So it's not, but look, when you have high prices like this, people are jumping into stuff that they probably don't, or really sketchy about getting into these payments, these houses. So I think 1/8 of a point does make a difference. And,
it does?
and I think it does. And I think in this market, you go back, let's say, 2017, 2018, maybe not as much. You have rates. 18 was a little bit crazy, but let's say even before that, we've been accustomed to lower rates.
Yeah.
So when you have that, people maybe can say, well, yeah, it's 1/8 of a point. Hey, you know what? I like you. I'll work with you. I think now, like you said, they're more rate sensitive, but the bottom line is characteristic of a person is going to determine if you're going to work with them or not for the most part.
I would also have to disagree with you, and here's why. Because even though I can get 1/8 of a point cheaper, let's say I save $60, but what happens if that lender can't close a deal?
Well, we're talking about rate.
Well, that's what I'm saying.
We're not, but we're not talking about closing. What I'm saying is psychologically,
well, that's where it begins, Dan. Because people shop you, right? If they can get a lower rate, that's where they're going. But what I'm saying is, it's not always about that. You have to look at the lender. Can they actually close the deal, and can they close on time? And I think that's what you were saying too, right?
Yeah, but the argument is, are they taking in consideration the rate above everything else? And they are. That's what the argument is, right? So the argument is are they choosing rate before anything? And they are, for the most part. Why? Because the housing. But I also think the characteristic of a person is really what is actually determining if you're going to work with them or not. I'll give you an example.
Yeah.
If somebody comes into a situation and they're scraping money together, right, and they're sketchy about the mortgage payment, they don't know, they're probably going to shop you, right? They're going to be looking around looking for the lowest rate. They don't care about service. They don't care about, hey, man, you know what? I've been doing this 15 years, and I know the ins and outs of every corner. You can provide that value. Some people may see that value. The people that see the value may not need to worry about the payment, may not need to worry about saving $20 on a mortgage payment or $50, $60. So is it important? I would say in today's world, yes, it's probably more significant than anything. But I'm going to say that it also depends on the person buying the house. Because if the person buying the house just wants to get into a house, let's say they got a 3 or 5 year plan to be in the house and they're going to pay it off.
Yeah.
Is rate really important at that point? What if they do a 5-1 ARM or a 7-1 ARM? Is rate really important at that point? Because they're going to refi. right? They're not married. So I don't know. It just depends on a case by case. But I think the characteristic of a person
It starts off
with that, and what is their goals, and are they going to be mortgage broke? Are they payment sensitive? Are they scraping, pennies together, nickels together to get into the house? And is that $60 going to make a difference? Look at inflation.
I remember when I first got my first loan, I didn't even care. I was like, oh my God, I can get finance? I don't care if this thing's at 5.2%. Who cares?
I think a lot of it too is the customer doesn't really understand how to shop for a lender.
Yeah.
I think that's just part of the lack of like financial education that unfortunately, a lot of us, they don't teach that stuff in school.
Yeah.
So how else do you know? It's just, who's got the best rate? But that doesn't always determine that's the best lender or that's the best decision to do.
Yeah.
But I think, to Dan's point, yeah, it's a case by case scenario. And, there are guys that's all they care about. I need the lowest rate, which again, they'll go online, right? And they'll deal with those guys, and that's going to be the end of the story. But I mean,
so it's based upon their current financial situation, where they're looking to be in the next 3, 5, 7, and 10 years, because depending also on the market, because the market could change.
100%.
You may get a lower rate. So at the end of the day, guys, we don't have the right answer. The reason why we do this podcast is so that way we want you to think about things like this, so that way you guys can make your own decision on how to find the right lender. Now, we talked about this. The current median price point for a home is $450,000. Average days in the market is 17 days at $254 a square feet. That's what you will use as a barometer when you are shopping for a home. I want to move on to townhomes. Townhomes right now, the median price point for a townhome is $315,000. Average days in the market is 13 days. You will be paying $235 a square foot. What do you get? 1,400 square feet, 3 bedrooms, and 2 baths. Let's talk about townhomes, right? Do you finance on townhomes, and what type of financing is out there for townhomes, and what should buyers be looking out for?
Yeah, townhomes are easily financed. They're treated essentially the same as a single family.
Okay.
So no real changes there. It's only when you start getting into the condos, which I'm sure you'll get into later.
The reason why I'm bringing this up is because we've done some deals that you may have a townhome that actually has a building and also a unit. Correct, Dan? Explain that a little bit.
Yeah,
what are the challenges?
The plat map tells you if it's a condo or not. And some of the
legal
condos,
description, yeah,
the legal description. And sometimes the condo is actually, or the townhome is actually a condo, by definition. And you have to go do your research, right? Make sure you get the condo questionnaire, making sure that there's no litigation. Yeah, all these things are important because once you get an underwriting, we can't sell it.
Yeah,
right. If you're trying to sell it to Fannie or Freddie, we're stuck.
And I think that's where the whole is your lender good or not? Does the guy that quotes the lowest rate, he may not have that experience that what we just talked about, because
but that's all he has is a low rate.
Exactly. And I mean, there's numerous times where we've done deals and we get a contract and it says that the agent say it's a townhome.
Yeah.
We pull the legal description, it's a condo. And they want to argue with us saying it's a townhome. It's like, no, it's a condo and you didn't research it. So now there's a whole nother set of rules that come along with financing that. So I think that's, again, some of the stuff.
Now, I want to talk about this, and I think this is important. The consumer's not aware. Let's talk about the in-house, right? The underwriter, right? Because you could be working with a bank, and their underwriting department or the processing department, right, literally takes control of the file. And as a lender, you're pretty much a loan originator, but sometimes lenders have more give, right? They can work better with the underwriter because they have that relationship. But when you're working with like a major bank, and I'm not going to call out what bank it is, right? They could be on the East Coast. Time is of the essence, and you have so much people working on this file. It could actually be harder versus you, the loan originator, can walk over to the underwriter or the processing department and say, hey, man, I got to get this thing done, right? What's the benefit of that?
I mean, I think it's your relationship, definitely. But not only that, I think it comes down to the loan officer. Do they know their guidelines? Do they understand what, like Dan said, what is Fannie and Freddie looking for?
Yeah.
Because if not, then you don't know how to properly package that file up front. But not only that, what type of property is the agent writing on?
Yeah.
The loan officer should be aware of that information, because if we know, let's just say it's not on the FHA approved list, but the client's only qualified for FHA, that deal's not going to get done, right? And we know that from the beginning. So why are we even wasting time on that property? So I think it's twofold.
Yeah.
One, the LO's got to know what they're doing, but also two, really know how to package that file up front before it even gets to the underwriter.
And I think what also makes a good agent is experience, and the agent should be working directly with the lender and having that communication, and also with the buyer too, because it's really like building your dream team and getting everything, all in gear, ready to go. So that way, once you are out in the marketplace, you know that this deal is going to go through versus trying to piece it together. Yep. Because sometimes what happens is there may be some circumstances or certain conditions, right, that we're not fully approved, but we know we can get approved within the next couple of days. All we need is this. As long as we're on the same page, we can still get it done and we can start shopping. And we've done this multiple times. Because when it comes to financing, what I realize is that it's not as easy as people think it is, right? There's so much involved, right? And the more you know as a lender, and if you have an experienced agent, you guys can literally work together and say, hey, this is how we'll piece together this deal. And that's what it really comes down to. The problem is that the average consumer, all they look at is, am I approved or not? But there's so much more in that back end people are just not aware of. So I really wanted to express that, right? It's all about, the lender knowing exactly what to do, how to get this deal done, also communicating with that agent, and that agent also knows, hey, this is how we got to structure this deal. This is how we got to write the offer because your debt to income ratio is too high. Look, we can barely scrub by, but we can make it happen. Do you see what I'm saying?
Yep. Agreed.
Now, I want to talk about condos, right? But before I get into condos, I think people need to be aware of this. What is the difference between a condo and a townhouse?
I believe you got the attached, right? Above and
it's
to the side of you.
Yeah, shared dwelling. Usually if it's a unit that gives it away, but if the property is shared with another dwelling, then it's technically a condo. It's its own lot. If it's its own lot, then it's technically a townhome.
I think for me, the better way to take a look at this, if you have a garage that's actually attached to your unit and you can literally walk into your unit, that's considered a townhome. If it's just a dwelling, basically 3-4, this would be considered a condo. Now, there are some townhomes like we just discussed that could literally be considered a condo, but we've done some deals like that where we had to go back to the underwriting and basically get this deal done. It's a little bit harder, but the experience, right? Now, if we look at condos right now, the median price point for a condo closing, $228,000, 14 days in the market. What do you get? 1,000 square feet, 2 bedrooms, 2 bathrooms, sometimes a carport, sometimes you ain't get nothing, right? 14 days on the market. Now, when it comes to financing on condos, what are some of the things that we need to look out for with condos on financing?
Condos are tough, man. I'm not a big fan of them, to be honest. One, if you're only qualified for FHA, you want to figure out, are the complexes that you're considering, are they on the FHA approved list? If your lender doesn't know what this is, you might want to go find someone else. Yeah. But it's public information. Anyone can look that information up. But if not, we can mostly finance anything that's conventional financing as long as it's your primary residence. If it goes outside of the box, then there's what we call non-QM, so non-qualified mortgages, where these brokers will finance essentially anything. As long as you got the down payment, there's ways to get it financed.
Let's talk about condo search. What is condo search and why is this important?
That gives the lender all the vital information about the HOA. Is there, like Dan said, is there litigation? All the financials that basically tell us the viability of the project itself and whether or not, are there issues that could be coming down the line.
Let's talk about occupancy versus, owner versus investor. Is that a big part, and what is that percentage?
Big part, yeah. So I believe it's got to be at least 50% owner occupied or 51%. If it's more than that, which is also a big problem here in Vegas, because obviously as the crash happened, a lot of investors came in to purchase. So it throws off that occupancy, which makes it a little difficult for lenders to get financing.
Any thoughts on that, Dan? Anything else we should look out for?
Owners, you can't have an ownership more than, I think it's 15%, can't own more than 15%.
One single entity, right?
Yeah. Okay. And then the other one is high ground litigation or litigation. Sometimes I've seen it where there's a stalled litigation issue going conventional, and the process has gone through where they've said it's been satisfied, but it's still sitting out there, right? And those things do come up, and you have to get those resolved, and sometimes those can be a real pain in the what, right?
Yeah, it could take forever.
So those also have to say, well, if it did have litigation, high ground litigation, whatever it is, have they been resolved, right? Or is it still pending? Because if it's pending, it's a huge issue. That's a red flag. Like, yeah, it could work out, but do we have the documentation? Are we going to be able to get into the attorney to get the information to satisfy this?
So what can a buyer do to prevent this by going under contract and actually spending money, right? The inspections, the appraisal, because by the time you get the condo, sir, all this is already done. And we could be into this for $800, right? So what can a buyer do?
I could say this. Let me flip this. I think what can an agent do?
Okay.
An agent can actually order the condo cert ahead of time.
At their cost?
At their cost. It's $200.
Will you pay for it?
Let me say this.
I'll send you the bill.
$300. Let me say this. For $300,
I'm gonna back down on this one.
For $300, are you going to ensure that that's going to go in smoothly, or are you going to be like every other realtor that says slam, 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 and it's like,
Sean,
all right, let's cross our fingers.
You're buying this shit.
It's like this. Let's cross our fingers.
So you're gonna buy this.
No, I agree. I think because if we know we're going down that path, let's do our research now. And you know, a lot of times what we'll tell our agents too is like, hey, send us the listings of where you're going to show these units. Let us try to do some research first before you take them out. And if we have maybe for some reason, maybe we closed a deal last month and I already got all the information, then you know what, this one's good. This one's not approved. You know, this one we can maybe do a spot approval on. So it's one of those things you have to communicate. It's not as easy as, hey, let's go out and look at it. We got to do a little more due diligence up front.
I'm going to bring up why.
Yeah.
So by the time that a lender gets to order that, you're 3-4 days after you disclose and you got intent to proceed.
Yeah.
You order it. Guess what? 7 to 10 days before it comes back.
Yeah.
Right? The HOA company or the facility's got to fill it out. You're bugging them, right? Why not just do it up front? And I'm not saying, hey, listen, if you want to come up with some agreement, just get the condo, the cert up front, have it all dialed in. Lender could look at it. You don't even have to write an offer at that point because you know it's not going to get done.
I think the best way to approach this, because here's the thing, the buyer's not going to pay for it, the agent's not going to pay for it. So I'd probably write into your contract for the seller to pay for it up front.
Yeah.
Right? And we will reimburse you at the close of escrow. So that way you can get it ordered prior to it, right? Then you could possibly start your inspections and your appraisals after. But I don't know if they'll accept your deal or not, but that's just an option. Now I want to move on to high-rises. High-rises. As of right now, we currently have 445 high-rises across the valley. What is a high-rise? What does that consist of? 5 floors and up? Yeah, 5 floors and up. The median price point right now is $475,900. What you are paying price per square foot, $470 a square foot, man, that's just crazy, right? Average days on the market, 20 days. What do you get? Roughly about 1,000 square feet, 1 bedroom. Now let's talk about high rises, because there's a lot of lenders out there I've noticed cannot finance for high rising because of the litigation, right? All this stuff. But what's crazy about this is that certain buildings, right? You'll notice, and I've looked at the history, that there's like that one lender that could do all the deals and they end up doing everybody's deal. So that's just a quick tip where if you're working with your lender, you're buying a high rise, he can't do the financing, just have your agent pull up to see all the closings, look at the financing, and who actually closed out on those deals. So that's just a quick tip for you guys. Now, let's talk about this. There's guarantee rate and also Loan Depot. Do you guys actually do financing on high rises?
We do, yeah. We would probably go like the non-QM route, I would imagine.
It's a non-QM deal.
Yeah.
Okay, what is non-QM deal? What does that mean?
Basically, it's a non-qualified mortgage. So for us, we are brokering the deal that we can't necessarily sell to Fannie or Freddie. So there's guys that are out there that are willing to basically look past some of the normal guidelines. They're lending their own money, and they set the rules.
Okay. Are those rules more strict?
Usually a little more lenient. However, my experience of working with them is not always the smoothest.
Okay, so let's talk about this. So this sounds like this is some overlays that you have to do, right?
Plus the rate's higher typically.
Yeah.
The risk is higher, the rate's higher.
Even though that you're putting down a little bit more, 25%?
They know you can't go anywhere else.
You're going outside the box, exactly.
Okay, so it's almost like it's a hard money in a way, right? That's what it seems like.
It's the in-between.
Yeah,
in between.
Not as ugly. You won't see 12%, but you might see like 8%.
Damn. That's high. That's real high. Now, you guys don't really underwrite those type of loans, right?
We do. They give us the guidelines, so we know exactly what they're looking for, but we don't necessarily process the deal in-house. It goes off to whoever the broker is, and they do their thing, and yeah.
You're just kind of a paper pusher.
Correct.
At that point. Okay. Yep. Well, that's a bummer. Well, let's move on to multifamily, because a lot of people, like that multifamily, but we're going to start off with duplex. We currently have a total of 28. So on a duplex right now, you can buy one for $320,000. That's the median price point at $160 a square foot. The average days on the market is 60 days. Now let's talk about this sector right here. What I've noticed regarding this sector, things are not moving, and the ones that are for sale looks like a dump, right? Needs a lot of work. All I'm seeing is price reduction after price reduction. The only time that this sector will move when I talk about multifamily, right? And I'm only talking about duplexes, triplexes, and fourplexes, only this sector right here. The only time it moves, if it makes sense. The return on investment makes sense. This at $320,000, if you're only making $2,000 a month off this doesn't make any sense. Your rate of return is so low. Now, financing. Do you do financing on duplexes?
Yep. Anything up to four units is still residential, so no real changes there.
Explain that for the consumer. What is single family residence?
Single family would be a 1 unit, duplex is 2, triplex 3, and then your fourplex is 4. So 5 units and above on one parcel, you would consider that a commercial deal.
Okay. Now, can you actually purchase these type of units with an FHA deal? And if so, is it beneficial?
Yeah, as long as it's your primary residence.
Give me a case where somebody would actually use an FHA loan to purchase something like this.
We've seen a lot of that come up recently, because I think just with social media and a lot of people talking about house hacking and all this, it's become a lot more prevalent. So, I mean, if you're going to occupy one of the units truly as a primary residence, you can certainly do it. And I think it's a great way to go. But also, too, I think on social media, they sell the idea. But I think, to your point, when you actually look at the numbers, does it really make sense?
Yeah.
And a lot of times I feel like, especially in our market in Vegas, I don't think it necessarily does.
Yeah.
Maybe other parts of the country it might work out a little better, but I think the numbers are a little tougher here to really crunch.
Now, it used to make sense when a duplex, you could have bought it for $80,000. And we've done this with a lot of investors when they were actually getting started. But in today's market, it doesn't make any sense. Even at 10% down or even at 20% down, it still doesn't make sense, because you're paying $160,000 a door. And like I said, it just needs a lot of work. Now, let's move on to a triplex. 3 units, $385,000 and $191 a square foot, 18 days in the market. That's 2,000 square feet. Again, same situation. There's really nothing that's really moving. All you see is price reduction after price reduction. Fourplexes right now on the market, 55 fourplexes. Only 6 has sold in the last 7 days. The median price point for a 4-unit building. What do you guys think?
Probably close to 500.
What do you think, Dan?
I say close to 6.
Dude, you're pretty close. $640,000 and $175 a square foot. Average days on the market is 30 days. Dude, I tell you what, do not buy a fourplex right now at $640,000. Please do not, because I tell you what, if this market backslides, oh my gosh, dude, you guys are going to be hurting. You guys are going to be crying. Remember this video, right? Now, also, Sean, I want to talk about this. You've been doing social media for some time now, right?
Yeah, about 3 years or so, 3-4 years, yeah.
Okay, and what's the name of that channel?
It's just my name, Sean Uyehara.
And what do you talk about on your channel?
We talk a lot about mortgage finance and really just kind of tips and strategies that I've learned over the years, and just things that we implement with our clients to help them really understand the mortgage industry and pitfalls to look for, so that way they can really learn how to get their mortgage right.
Okay, and how often do you have a new video uploaded?
On YouTube, we're uploading at least twice a week.
Twice a week?
Yep.
Okay, so what days are those?
Tuesday and Thursday, I believe.
Now, guys, I actually have a link in the description below, so show the support, show the love. So if you guys want to do a loan with Sean, I'll have that link too as well. Also, let him know that I sent you, so that way he can send the lead back to me, so that way I can help you find a home. Also, Loan Depot, what services do you guys provide?
We have everything. I mean, we're the second largest retail lender in the country, so everything pretty much on the conventional, FHA, VA, USDA, and obviously we can broker stuff as well on the non-QM as well.
You want to know something, guys? This was such a great show, and I definitely would love to have you back. However, I did the wrong thing. I forgot to do a commercial break, so we're going to do a quick commercial break right after this. All right, guys, so that didn't work out. So here's the thing. I actually had a full commercial. Here's the commercial. Let's redo this because I messed up. The show was going so good until now. Here's the commercial. Okay, so that didn't work out as well. So you guys are going to have to wait till next week with the commercial because I totally messed up. But maybe let's try it one more time. I don't know why it wasn't on here. Here we go. Let's try this again.
Does your house look like and have you been considering remodeling your home for some time now? Well, if you love real estate like I do and appreciate the attention to detail in the craftsmanship required to build a remodel or a gorgeous home, then I got the perfect company for you. Guys, I highly recommend Design Zone Remodeling. They are a stellar company that will turn your outdated home into your own personal sanctuary. They specialize in bathroom remodels, kitchen remodels, and full house remodels. Design Zone Remodeling has a reputation for excellent workmanship, competitive fees, and being able to offer a wide range of services and deliver the outstanding results to their clients. I use Design Zone Remodeling on my personal properties. Give Design Zone Remodeling a call today at 725-223-0871 or visit their website at designzoneremodeling.com to request a free consultation today.
What do you guys think about that commercial? It took me like
It's like one of those things you see at like midnight.
Oh, really?
You come in and you're like, nah,
buy now.
it's like, if you guys want to, never mind, I don't want to get to that.
Mortgage tune-up.
Mortgage tune-up.
Well, Sean, hey, I just want to say thanks for taking your time to come out here, man.
Yeah,
I really do
having me.
appreciate it. Actually, really had fun. And I think I said actually a couple times, didn't I?
Dude, you didn't wear the
Inside
shirt,
joke.
though. You got to wear the shirt.
Yeah, the actually shirt. But anyway, hey, guys, show the love, show the support. So if you guys want to get financing, I'll have his link in the description below. And hopefully we could do some sort of collaboration. I think that'd be pretty cool, right?
Yeah, absolutely, man.
All right. Any final words to the audience?
No, just I think like both these guys said, I mean, I respect both of them, and everyone had good points, and I think everyone's got a different motivation as to whether you're buying or selling. So just make sure you work with a good professional that gives you good advice.
I appreciate that. Now, guys, if you guys haven't had a chance to subscribe to the channel, go ahead and click that subscribe button. Also, follow us on Instagram too as well. Show us the love and support. We definitely love the opportunity to earn your business when it comes to buying a home out here in Las Vegas. Other than that, be blessed, folks.